Okay, so let's have a look at Part C, show the club's balance sheet as of the 31st of 12, 2018. So with the balance sheet, it's going to be very much like your question ones. So you're going to have your balance sheet at the start, so make sure you put in your heading. So we need to change this balance sheet for Crest. Wood. Make sure for year end, 31st of 12, 2018. I think it says in the question. So 2018. So we're going to have our fixed assets. We know the question. We've got our club account and we've got our equipment, or our club house and equipment. So we know the club house is going to be the same as in the question, 550,000. We didn't buy any. We also have an adjustment done in this. So if you go back to your adjustment, it might be a little bit easier to find the figures. So if we go to the adjustment for depreciation, here we go. So we've got buildings 550,000 and we've got a cumulative depreciation of 33,000. So in our balance sheet, just put them in as they are. We also have adjustment then for your equipment. So our equipment cumulative depreciation 17,850 and 41,000 for our cost. So let's go through these workings so you just go back and find them. The next one is your financial investments. So these are investments we did at the start of the year. And we calculate how much investment we're actually investing. So our investments are 67,500. Then we're going to add our assets up to get our total assets. So remember, you take your cumulative depreciation away from your cost to get your net book value. Our next heading then is our current assets. So current assets are always made up of our closing stock and our debtors, and then our bank if it's an asset, and then anything income if it's due, expense if it's prepaid. So in this question we've got our closing stock. From the end of the question, all the balance sheet figures will be found at the end of the question. So we got closing stock, so we closing stock 13,600, we had catering of 400, so we're going to put 13,600, that's our total closing stock. Our bar debtors are next, so our bar debtors 500. Then we got investment income due from working one, so remember we have received some investment, so due is 300, that's also taken from the question. It tells us investment income due 300. So remember, all these items for your balance sheet come from the end of the question. And then our bank, then that's coming straight from the income and expenditure account itself. So this closing balance, so because it's 83,300 on the payment side, that's going to be brought down to the receipt side for the next month. So if your closing balance is on the credit side, it's going to be brought down to the debit side for next month, so that's an asset. If the closing balance is on the receipt side, if we bring it down to the credit side, it will be a bank overdraft, and that will go into your current liabilities. So we're going to add all our assets up and get a total. And then creditors due within 1 year, that's looking at your creditors all the time. And then the opposite of what we have up here, if it's an expense due, it goes into your liabilities. And if it's an income prepaid, it goes into your liabilities or your creditors due within 1 year. So remember, if this is due, we have to pay it. And if it's subs prepaid, it means someone has paid it to us, so now we go back to the business. So creditors, taken straight from the question. So creditors 1,213, our wages due 250, and then our subs prepaid is hidden in here for 2019, so make sure we include that as well. And then you're going to add up your creditors, take it away from your assets, and that's going to give us our net assets of 700,720. So remember, so fixed assets, looking back at question 1, we've got 2. Don't forget your financial assets from your investment income and how much investments we put away. Your current assets will also have closing stock and bar debtors. Remember, if it's an expense and it's due, it's going to go in here. Or sorry, if it's an income and it's due, it's going to go into your current assets because it's money owed to us. If it's an expense and it's prepaid, it's going to go in here as well because we've that expense paid. On the opposite then, for your creditors are always going to go in. If it's an expense due, it's going to go into your creditors due in 1 year because we have to pay it. It's an expense, we still have to pay it. And if it's an income and it's prepaid, then it's going to go into your creditors because someone has paid that to us already. So now the club owes it back to the club. Your finance by section then is made up of your life membership. Now remember, we've done an adjustment on that already. So if you go and find your life membership, this is your adjustment here. So remember, we had 3 new members. 15,000 for the subs that into your subs. Your total, then you're going to add what we had at the start of the year and the new figure of 15,000 with 60,000. And in the question it says that's going to be wrote off for 10 years. So each year is going to be 6,000. So because that 6,000 has been used this year, we only have 54,000 left in our life membership. Your accumulated fund then is coming from part A. Your surplus over income is coming from part B. And then this very last one, your levy reserve fund. So remember, in the question, we're going to have a levy reserve fund at the start here of 30,000. It's going to tell us we need to levy reserve then for 2018. So a levy for 2018, 50 by 600 gives us another 300. So our total levy is going to increase to 60,000. So 60,000. So levy is kind of like money we put aside for something that we might purchase in the future. So we're just putting money aside in case we're going to use it in the future. So you have 30,000 coming in. We're putting aside an extra 30,000. So the accumulated fund of how we run the business is going to be 60,000. So when we add all these 4 items up together, we get 720,000. And that's part C done of your club account.